I think Bitcoin was it was a $90 billion asset class in March of 2000 when I was first looking at it. And then by August, it was about $180 billion asset class. And right now, 4 years later, it's $1.8 trillion asset class. And I think it's going to 18 trillion, then 180 trillion, then it's going to go beyond that. So I think it's a very simple thing. I think Bitcoin is going to grow from 0.1% of the money in the world to 7% of the money in the world over the next 21 years. And of course, you should just go long and keep buying.
Renowned Bitcoin advocate Michael Saylor and his company, MicroStrategy, have been making waves with their aggressive Bitcoin strategy. The Virginia-based business intelligence firm recently completed a $3 billion offering of 0% convertible senior notes due in December 2029. According to Saylor, the proceeds will be used to acquire even more Bitcoin. Initially targeting $1.75 billion, the offering was upsized to $2.6 billion on November 20 due to overwhelming demand, including a $400 million green shoe option. The notes carry a 55% conversion premium, with an implied strike price of approximately $672 for MicroStrategy's Class A common stock. MicroStrategy's ventures have paid off handsomely. Saylor highlighted in a tweet that the company's stock, which hit an all-time low of 42 cents in 2002, soared to $499 last week. Bloomberg ETF analyst Eric Balchunas noted that MicroStrategy became the most traded stock in the U.S. on a single day, surpassing giants like Tesla and Nvidia, a rare feat that underscores the growing interest in the firm's bold Bitcoin strategy. In a recent appearance on the PBD Podcast, Saylor elaborated on why MicroStrategy is doubling down on Bitcoin. He reaffirmed his bullish outlook, predicting that the leading cryptocurrency could eventually reach an astonishing $13 million. With its innovative financing and unwavering faith in Bitcoin, MicroStrategy continues to cement its position as a major player in the cryptocurrency space.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I love to see everyone there. Peace out.
On October 30th, we announced our 2121 plan. So $21 billion worth of equity we're going to raise and $21 billion we're going to raise in fixed income securities. And we filed this shelf registration to sell the $21 billion in equity in at the market offerings. So then the next week, we had the election, a lot of activity, the red sweep, and then that Monday, a week ago from today, we announced we'd actually bought $2 billion of Bitcoin. So that was like a $2 billion week, and it's like 27,000 Bitcoin or something. But then another week went by. So the announcement this morning was from last week's activity. So that's 5 days in the marketplace. So we did about $2 billion the first week, and we did $4.6 billion the second week.
This is the biggest ever, biggest purchase you've
Yeah,
ever
I
made.
think it's the biggest Bitcoin purchase ever. Yeah, so $6.6 billion since we had our quarterly results. So, I think it's like 41, 42 times we bought Bitcoin in that range. So ever since August of 2020, we keep buying. We don't sell. It's a very simple strategy. Bitcoin is Manhattan in cyberspace. I just want to keep buying Manhattan in cyberspace. I have this theory that one day 8 billion people want to put their money in Manhattan in cyberspace. And of course, the more we bought, the more transparent we are, the more the capital markets get behind us. So now, if you're an investor on Wall Street and you're looking for the company that's going to buy up cyberspace, then you're buying MicroStrategy stock. And some people like Bitcoin, so they buy Bitcoin. Every day of my life, I tell people to buy Bitcoin. Some people want more Bitcoin, right? The joke I have is the only thing better than Bitcoin is more Bitcoin. So we borrowed $4.2 billion at 82 basis points, and we bought Bitcoin with it. So for the people that like Bitcoin, they buy it, but people that really like it want to borrow a lot of money and buy more. And then there's another group of investors, the convertible bond investors. And how do you buy Bitcoin at the all-time high and get the upside but don't have the downside? So you buy the bonds, and it turns out that our bonds have outperformed Bitcoin, but they're bonds. And so that blows people's minds that we can actually sell you a bond. They don't just outperform all the other bonds. Some of these bonds are, I mean, they're trading 200 plus against 100 basis. So they're up 100%. So they outperform all the bonds, but they also outperform the Bitcoin. And that's because we've created a public company with a tiered capital structure, and we've got a lot of permanent capital. Then we've got the senior bonds and the capital structure, and then the equity, generates a BTC yield. And so a lot of Bitcoin maxis pile into the equity, and that gives us a premium. And we're able to use the premium from the equity in order to create very accretive capital markets transactions with the bonds and the rest of the equity. And so the way it works is we're selling convertible bonds. And the convertible bonds have a bond component, and then they have an option component, like a call option. And so the convertible arbitrageurs and the options traders, they like the volatility in the stock. One thing you might not know is we have the most volatile stock in the S&P 500. So if you took all 500 stocks in the S&P 500, you said, which is the most volatile? Like, we're like 100 vol. The S&P, the VIX is like 15. Most of the Mag 7 stocks, they would be like 20, 25 vol. Bitcoin is 50, so it's like 3 to 4 times the volatility of the S&P index. MicroStrategy, we lever the Bitcoin, so we get 2x that, so we get to 100. And conventional investors are afraid of volatility. They fear it. They're like, I can't handle the volatility. But volatility is like RPM in an engine. It's like spinning at 100 RPM instead of 10 RPM. So if you plug volatility in the Black-Scholes equation, the options are a lot more valuable if you have volatility.
Despite criticisms of Michael Saylor's strategy, the business executive firmly stands by MicroStrategy's approach, highlighting the firm's unique combination of high volatility, liquidity, and durability as a safe and compelling option for investors. Saylor likens MicroStrategy's liquidity and volatility to a powerful weapon wielded by an immense force, capable of delivering exceptional results. He underscores the value of MicroStrategy stock, particularly for investors unable to directly access Bitcoin due to regulatory constraints, offering them a pathway to the cryptocurrency while benefiting from the financial strength of a company with one of the lowest costs of capital in the market. Saylor emphasizes that investing in MicroStrategy stock provides dual exposure, both to Bitcoin's growth potential and the operational expertise of a forward-looking enterprise. MicroStrategy's robust Bitcoin strategy is a standout feature, with the company currently holding an impressive 331,000 BTC valued at over $32.7 billion, the largest Bitcoin holdings of any public company. Saylor's unyielding belief in Bitcoin continues to drive the company's ambitions to acquire even more of the digital asset. This strategy has cemented MicroStrategy as a pivotal player in bridging traditional finance and cryptocurrency. Saylor's vision reflects his unwavering conviction in Bitcoin's potential as a transformative financial asset. Check out more clips from the video for deeper insight.
I think Bitcoin was it was a $90 billion asset class in March of 2000 when I was first looking at it. And then by August, it was about a $180 billion asset class. And right now, 4 years later, it's $1.8 trillion asset class. And I think it's going to 18 trillion, then 180 trillion, then it's going to go beyond that. So it'll go from like 1.8 trillion to $240 trillion, and it'll go up 29% a year, ARR. That is my base case.
And I've heard you say that in 21 years, it's going to be at $13 million
That takes you to 13 million a coin.
13 million a coin.
13 million a coin.
At 29%.
Every Bitcoin you don't buy is going to cost you $13 million, my friend. Basically, what I'm saying is that the 29% ARR is the risk-free cost of capital in the crypto economy. And the way you get to that number is Bitcoin's been going up about 55 or 60% a year for the past 4 years. It's been going up a little bit faster before that. But right now, Bitcoin's appreciating 60% a year. The S&P index, which is the conventional cost of capital, is more like 14, 15% a year. So you've got like a 4x difference. The mainstream economy is plus 15 points. Bitcoin is 60. They're going to converge. As Bitcoin gets to the size of the S&P, when it's 100 trillion or 200 trillion and it's close to the S&P, it's going to be 1.5x the performance of the S&P and 1.5x the vol. The VIX, which is the S&P volatility, is about 15. The ARR is about 15. Bitcoin's like 60. I mean, you can figure it out from the law of large numbers. When Bitcoin's a $100 trillion asset class, it's not going to be as volatile. And of course, at some point, companies in the S&P are all going to hold Bitcoin. And so like if MicroStrategy gets in the S&P and Tesla owns Bitcoin and other companies, if Microsoft starts buying Bitcoin, pretty soon the performance of Bitcoin is going to goose up, is going to improve the performance of the S&P, and then Bitcoin's going to converge. Bitcoin's always going to be more volatile because it's 24/7, 365, and it's always going to be higher performance because it doesn't have the risk factors of property or companies and the like. That's a very useful chart. You can pretty much understand the world if you focus on that, which is if you capitalize on bonds, you're minus 5%. That's why all the banks are struggling, and that's why operating companies can't accumulate capital. Because what that's telling you is that if you're using bonds as capital, it's toxic. It's sucking 5% of your life out of you. And look at the cost of capital, 15%. So here, if you use bonds, you're minus 20% versus the S&P. That means that it's an awful, way to build shareholder value. If I asked you, do you want to hold $100 billion of cash in bonds and you're Apple or Microsoft, the answer is no, because it's minus 20%. You might as well just give it back to the shareholders. They put it in the S&P index. But now look at the other side, right? Bitcoin is 4x that. So if I said you could put $100 billion into bonds or $100 billion into the S&P or $100 billion into Bitcoin, which of the three charts do you want? It's pretty obvious. You take the 60%. So what MicroStrategy did is we capitalized on Bitcoin, which is 60%, and then we levered it up with cheap convertible debt and equity raises, and we got to 120%. And that's how we ran 30x. Like, that's why we outperformed NVIDIA. Like, we're 2 or 3x NVIDIA over this time period, because we're actually capitalized.
In a landmark move, MicroStrategy has acquired an additional 55,500 Bitcoin for $5.4 billion, marking its largest single purchase to date. This follows the firm's earlier acquisition of 51,704 BTC for $2.12 billion earlier this month. Michael Saylor's announcement ignited excitement across the crypto community, revealing the company now holds 386,000 BTC valued at approximately $21.9 billion, acquired at an average price of $56.700 per Bitcoin. With a quarter-to-date yield of 35.2% and a year-to-date yield of 59.3%, MicroStrategy continues to solidify its position as the largest corporate holder of Bitcoin. This acquisition aligns with broader market trends, as institutional demand for Bitcoin shows no signs of slowing. Reports from Cointelegraph highlight that spot Bitcoin ETFs purchased 34,800 BTC last week, far exceeding the 3,150 BTC mined during the same period. This growing supply-demand imbalance, amplified by the approval of spot Bitcoin ETFs earlier this year, has fueled a consistent bull run, with Bitcoin hitting multiple all-time highs in recent weeks. Analysts, including Bloomberg's Eric Balchunas, describe this surge in demand as entering Pac-Man mode, with expectations for continued bullish momentum well into 2025. Do you share Michael Saylor's super bullish prediction of Bitcoin reaching $13 million in the coming years? Share your thoughts and insights in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.